Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Monday, February 5th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. Start with the big picture, work our way into the day itself. This is a weekly bar chart. It shows a channel structure that is like a solid 6-7 months in the making. We tested the top of it 7 weeks ago, and when doing so, I'd mentioned how the bottom, presently at 173.28, should be considered attainable over the following 3 to 5 months. Not necessarily expected, but certainly within the confines of channel dynamics. You cannot discount the possibility for falling back to the channel base, which we did come close to doing a couple of weeks ago, and since have been in this sort of two-sided consolidated framework near term over the last week or two. On the way down, this was the clarifier for whether or not we would likely test the 174.42 channel bottom on the daily chart. And that was the settlement below this combination rising channel bottom speed line, presently in the 232.63 to 34.31 region. So we're not going to see that anytime soon, but this was the indication as a 3 to 5 week sell signal. We're probably 3 or 4 weeks into that right now. Might we test 174.42 this week? We just might, and I'll just jump to this chart here, and that is, 186.32, a descending 1/3 speed line. Now, we closed numerically Friday at 187.91. These line studies are dropping at a steep pace, and I'd mentioned if you're to sell them and hold that short position overnight, you really want to see the market back away from these line studies by the afternoon because just a mere open today above 186.32 should spark buying interest. That can be considered a day support level if we open clearly above 186.32. You could also consider a 182.72. Now, we have these weighted because 186.32 is a session containment level. It has meaning if we close above it today on Monday. For the next couple of weeks, I would expect recovery to the 215.51 descending 1/3 speed line. In terms of the 3 to 5 week time frame, I could back up just a little bit. I've been mentioning how once we test 174.42, we could round up to this speed line that is at 251.51 and dropping within 3 to 5 weeks. And inversely, if we were to test 215.51 over the next couple of weeks, it just might contain buying pressures through March trade, because from here we could fall back into the mid 170s within 3 to 5 weeks of doing so. I also mentioned that if we test that 174.42 channel bottom, and that is 173.28 all week long on the weekly chart, that you could allow for, at the very least, prepare for possibly a bullish rotation within several months back to the 258.13 channel top. And the clear indication for that would be a settlement above the 215.51 descending speed line. The clear indication for whether or not we will rally back into the low 250s again would be a settlement above 215.51. Let's get back to the day itself. 186.32, a meaningful pivot point. 182.72 is as well. They are both very similar structures. One is a descending channel top, and the other is a descending speed line. And so I'll leave it to you. You could buy 182.72 as well, assuming we open above it. It may well be the level that holds for the day. But if we close above 186.32, which is why I have it weighted as a session containment level with an up pivot point, I think that signals 197.64 within a couple of days, and this 215.51 speed line within about 2 weeks. I think 2 to 3 at the most. With higher volatility, it could certainly be by the end of next week. Now, if we're talking the day trade here, I just want to mention that if we open above 186.32, we just might reach 197.64 today. But I will say that closing above 186.32 does indicate 187.64 within a couple of days. We could top out there on a daily basis. It also has upward pivot point qualities, but closing above the descending 1/3 speed line, I think that sets up 215.51 as a realistic 1 to 2 week target. And certainly, if over the next few days we close above 197.64, we should see 215.51 over the following 3 to 5 days, where we could top out as we move into March trade. So how to play it? The 3 to 5 day swing trade levels are really 186.32 and 197.64. The 2 to 3 week swing trade, though, I'm going to still hold as 186.32 because closing above it should yield 215.51 over the next couple of weeks, 2 to 3 weeks at the most, where we could top out well into March trade. Let's talk downside. I don't know if we're going to do that today, but if we do happen to open, say, below 182.72, that should yield 174.42 on an intraday basis. So 174.42 is still attainable on an intraday basis, especially if we break or open below 182.72. And certainly closing today below 186.32 will keep the 174.42 formation in reach this week. And that is this is a better image of it, 174.42 on the daily chart. And once again, on the weekly chart, we do have 173.28. 177.25 is a 5/8 long-term Fibonacci from the January 23 low against the more recent July high. So this entire area is still now roughly 4 points wide, able to absorb selling not only through February, but even through the second quarter perhaps, and we can round back up from here within several months of testing the low to mid 170s, the 258.13 descending channel top, where we could top out again on a monthly basis. We could trade inside the confines of this channel structure for the next 3 to 5 months perhaps. Whether or not we test 258.13, I think if you test 173.28, you can begin, you can prepare for that. In other words, you could either go long Tesla and now you're holding for the channel top at 258.13, or perhaps you're reaching for 250 strike out of the money calls that don't expire. I would go 6 months out on that expiration. Now for the downside, if the market continues to sell off, and just once again, I'll remind you that holding below 186.32, continued daily settlements at or below 186.32, dropping steeply, will keep 174.42 in reach over the next few days. And if we do happen to close below 174.42, I really want to see that as a weekly settlement below the 1%, at or below the 1% mark. So a 1% violation of 173.32 is 171.54. And if we settle Friday 171.54 or lower, Tesla enters another sign of longer-term weakness. And that could be just another 7-week move. It could take 2 to 3 months, but somewhere in 7 weeks out to 3 months at the most, I would expect this market to continue south into the very low 100s, 101.81 to 103.71, where we could, yes, double bottom on a monthly, possibly quarterly basis. And that's as much as I will say about that. Until then, we've been in a consolidated framework for the last week and a half. It's been a wild consolidated framework, but it has been in this sort of two-sided dynamic. And if we close today above 186.32, I see that as ending, expecting 197.64 within a day or two. 197.64 is a solid day trade level. Whether you're positionless and looking to sell a short there on a day trade basis, or whether you're already long with an open above 186.32, you buy either 186.32 or 182.72. You reach 197.64. That's a decent profit-taking area for day traders. I wouldn't sell 197.64 as a 3 to 5 day swing trade because once again, I do think that closing above 186.32 is your indication for 215.51 over the next couple of weeks, with 197.64 just a hesitation point on the way up. And finally, closing above 197.64, that is a 3 to 5 day swing trade to the upside. So that is a solid go with to the upside. If you've done nothing, if you have no position, and we close above 197.64, it is really an indication to get long on a 3 to 5 day basis up to 215.51, where profits can be taken and short entry, assumed, and possibly all the way back into the mid 170s within 3 to 5 weeks. I think I've said it all. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. We offer lots of good stuff every single day, all week long. Videos just like this, about 15 of them actually, that you can subscribe to. You can check it out for free for 5 days just by going to wickedstocks.com. If you don't like what you see after 5 days, you can bow out at no cost to you whatsoever. I'm going to leave it at that. Thanks for watching. I'll be back tomorrow, of course, with Tuesday's Apple, and Tesla report.